Good morning, everybody. It is December the 5th, 2016, and we are awakening to the results of the Italian vote. The Italian vote was couched in terms by the current leader of their parliament and government is that a vote for me is a vote for the status quo, staying in the EU, etc. So his defeat could be interpreted as the Italians won out of the EU. It wouldn't happen quickly, and if at all, but what it has done is pressured the Italian banks. They're back in the news. Every market reacted the way that you would have expected. Treasuries were up, gold were up, equities were down. The European, Asian markets collectively didn't have a chance to recover with the opening of the European session. They were off 2 1/4 collectively. Europe was up almost 3% collectively, and the rumor is that the ECB's plunge protection team came in and bought everything all around, and the market rallied. Now, in the financial press, those that had anticipated the defeat of this Italian government were short into this news, and when this news hit, rumor fact, they started covering their shorts massively, and that's what caused the rally. So there's always a little plausible deniability, but if you look at what's gone in the stock market since March of 2009, it'd be hard not to suspect the ECB's plunge protection team of getting involved in the action. What is Italy getting out of the EU, or voting to get out of the EU portend? Means France probably will too. And so here we have Greece, Italy. France is not a part of the pigs nation. And perhaps Spain, the southern, all the states that border on the Mediterranean, having trouble with Brussels, basically with German rules and regulations and impositions being placed on their economies. Now, we talk about London time, which is right here, and we talk about Frankfurt, Paris time, which is right there. Right now, you got to get up an hour earlier to get the jump on London. That's the way the game is played. Fundamentally, Italy voting down their government and quote unquote to leave the EU is probably good for treasuries longer term, but central banks once again rule. You can't do anything in any commodity or any place without considering the action or reaction of central banks. And right now they're fighting like with everything that they have to maintain our stock markets, equity markets at these level and or higher. So here we sit at 2410.5. We do have some news this morning. We've got PMI services 54.9, ISM services 55.3, and labor market conditions indicator, don't know. It was plus 7/10 last. No one will pay any attention to it. So ISM services right here will get the market's attention, and that could come in higher than forecast, as could PMI services. PMI services has been riding high really for the last couple of months on everything. They've come in higher than forecast. The ISM numbers have been mixed, sometimes higher, sometimes lower. The market is selling right now. I think we have one more sell left in the market. So 11 to 15 is pretty aggressive. Sell 1. 19 to 23 is not so aggressive. Sell 2. On the buy side, I think we're headed lower. So 1 to 5, buy 1. 25, 29, buy 2. And we'll put a question mark right here at 8. Let them get stops beneath that. But right now, structure, everything says we're headed lower. we'll see if we continue. If we can't break support, the initial reaction of this market was to rally, and you can see that in the Globex market. And we have rejected prices above 29. So the started K period was 27. So that 24, 28 is best resistance. But I think what we're seeing right now, and this the reluctance of any government around the globe to let their economies and markets do what they're going to eventually do anyway, and they fight the delay game. These people can't lose their jobs, or they can't be out money, and it just exacerbates or makes the problem. It just prolongs it. And as painful as it is, remember, recessions used to be 9 months to about 18 months. And we've been in very, very slow economic times for a long, long time. You can make the case for since 2008. And I know that all these people, we only have an unemployment rate of 4.6, but it's because 95 million people are sidelined right now. And some of those 95 million don't want to be sidelined. Not all of them. Some of them are pretty happy where they are. Okay, looking at the 30-year, the 10, 11, 12, this area right up here is pretty good resistance. We're at 3, so 8 to 12, number 1. 15 to 19 gets us close to the spill right here. That's cell 1. And then 27 to 31 for cell 2. On the buy side, 24, 28, number 1. 17 to 21, buy 1. And then we'll make 49.05, 49.09 by 2. Okay, gold, again, the initial reaction was exactly as you'd expect. The Italian government goes down, gold will rally. And when we come in and we do the ECB's intervention in the market, that's a K split. It's right there. Started a little bit earlier in gold. They tend to be on top of things. And the market has come down. Now, we did not get stops below 62, so that gives us some a reason to think that we might have a trading range market. So sell 1, 74, 76, pick up London resistance. Asia stopped right here, so 79 to 81, sell 2. On the buy side, 65, 67, and 60, 62, buy 2. Quite often, the highs and lows, well, not quite often, about 80% the highs and the lows, no matter what's gone on, are set in the Globex session. And if you think about it longer term, what happened in Italy, short term is not bullish because it upsets the status quo. Longer term, it's probably supportive if they figure out ways to minimize the impact of the EU in their day-to-day or everyday lives. Now, one of the reasons the euro could rally, besides the European Central Bank, which would be the main reason, is that if the European Union can get rid of, I'm doing a case split because that's Frankfurt, it's the ECB, potentially right there, came in at 105.65. The low was 105.12. We were going for stops below 105, but you can see right here where the intervention took place is that getting rid of Italy, Spain, Ireland, Greece, etc. Isn't a bad thing over the long haul for Northern Europe anyway. And I that's supposition, but that could be one reason they point to. So here's our breakout right here at 106.95. So basically 106.90, 106, 107 is where support is. So, and I don't. The trade is very, very aggressive, but it's where support is right now. And then we have the breakout down here, basically at 75. So 65 to 75 is buy 2. And the bottom line here, that's at 35 area. So 35, 40. That level can hold. We can actually trade higher. On the sell side, 107.75. So 70 to 75, sell 1. 108, sell 2. But I just, in my, oh gosh, since 1980, I can't, this is like being in war, but in the financial market. So in war you have just potentially catastrophic or market moving on news hitting all the time as territory is won or lost. And in the financial markets, you just can't, or I can't remember any time where we had so many different things hitting the market all at once. But we need volatility as day traders to prosper, and this certainly lends itself to that. Okay, crude took off in London. They expect the deal will be that OPEC has proposed will be adopted by non-OPEC producers. They will meet this week. Remember, we left on Friday saying look for announcements over the weekend that the deal was going to go through with the non-OPEC producers, and the previous high was in that 52.25 area, 52.30 area, and we've gotten stops above that. Everybody's pretty well settled on the price. If the deal does go through, we're going to $60, including Jim Rogers. Where did he get his number? Goldman Sachs. So we're there. And we will see what happens. So maybe a little bit higher, 52.50, 52.75, sell 1. And 53.25, sell 2. Been a long time since we've been up here. On the buy side, 51.75, 52, buy 1. Very, very aggressive, but that is the structure. And then 51.25, 51.50 to pick up this area down here for buy 2. And looking at the E-mini, I don't think the news was that bullish, so we've rallied, and there's a good chance that 22.05, 07 is where resistance is. So 22.4 to 6 is resistance, sell 1. 9 to 11, sell 2. Breakout in London came from 96, so 95, 97, buy 1. My inclination is to sell it. And then 89, 91, buy 2. PMI services, 54.9. That's not the number that they'll key off of. That number probably higher than forecast. ISM services, 55.3. That's the number that they'll key off of. And that's been mixed. I'd be pretty comfortable saying that this number comes in higher than forecast. That one I don't know. Don't have a feel. Okay, I'm going to take a bit to get everything up and posted. Going to get busy on that. I will be back with you as soon as possible.